Hello and welcome to Skills to Pay the Bills and today's segment of Just Ask Freeman.com. I'm your host, Freeman Owen Jr., and with me is my co-host and lovely wife, Carolyn Owen. We're the owners of Financial Sources, Inc., and I'd like to share with you what we do. We're licensed agents, and we help clients who fear running out of money in retirement to avoid costly mistakes, where those mistakes can put their nest egg at risk. Now, we engage clients in a conversation to identify their priorities and help them create a path toward achieving them. In addition, in the process, we help our clients receive the peace of mind knowing that their money is safe and that the lifestyle they wish to live is only achievable, not only achievable, but also within their grasp. So we're going to talk and discuss some very important topics today that are relevant to retirement income planning. So today, Carolyn, let's get started, and then why don't we give a little summary on what we're going to talk about today?
Freeman, we have some really interesting topics today, as usual, but we're going to start talking about college, the cost of college, finance of college, and is it really worth it?
Exactly.
We're going to talk about that.
Right.
Then we're going to take a look at the workforce today. And take a look and compare with how it was 50 years ago.
Oh, that's good.
Yes, or just take a look at the differences in the workforce today.
Right.
We're also going to talk about some things that people concerned with retirement or try to plan for retirement. When to retire, where to live, what to do.
Exactly. Yeah.
And then we're going to talk about a letter of instructions that we can leave to our loved ones when the event happens that we're no longer here.
Okay, well, let's get started.
All right, let's go. Well, Freeman, you know, with college at an all-time high, college tuition at an all-time high.
Exactly.
And sometimes you only have one provider working now with the way the workforce is now. So sometimes people really cannot afford college. So the question is, can families make smarter choices
Exactly.
about financing for college tuition?
Of course they can. One of the choices, major choices, Carolyn, is that to be informed. That is educated about the cost of college and planning very, very well. With the financial futures of college-bound students and support of state parents at stake, we'll look at the college year 2013 to 2014, which is running about $18,000 for a public university. Your private universities, the payout is about $41,000 per. Now, the average cost for a four-year program runs anywhere between $100,000 to $200,000 per student. And that means even affluent families either have to borrow money or put their retirement income, or I should say their retirement nest egg, at risk. So when you look at the price of college tuition, which has more or less increased faster than incomes. Now, today, college debt is in excess of $1.2 trillion. Now you hear that? 1.2 trillion. Compared to 10 years ago in 2004, it is now 3 times more than it was a decade ago. Now, that student debt, as I mentioned, has reached 1.2 trillion. The average student is graduating with debt of anywhere between $33,000 to $44,000. Here's something that's interesting too. The parents have noticed that, or I should say, parents and students have seen or have experienced defaults on those loans. And so that makes it kind of difficult for students to have a bright future with the debt on their backs to after they come out of a university. There's a weak job market that has resulted in an increasing number of underemployed graduates. That situation is especially tough for those who are mired in debt.
Well, Freeman, with that in mind, you know, you have parents and 18 and 24-year-olds wondering whether a college education is really worth the time and expense. So what's your advice to parents and young adults who consider college to be a waste of time and money?
Well, I beg to differ. All righty. With a 4-year degree, the college graduate earns over a lifetime $500,000 more than one who has not graduated. Now, I know that it used to be some years ago that you would look to elite schools to provide the opportunities like intern programs, placement, etc. You don't necessarily have to attend one of these elite schools because a lot of them do not offer those particular opportunities anymore. And something else I've noticed too, I've seen and have read reports where there are 2-year programs, all righty? Especially if you have a skill set in today's economy. And those individuals with those who have been certified with these 2-year programs are doing very, very, very well. Now, consider the fact that when you ask a student, or when the survey was taken, if a student had $20,000 to $40,000 in debt, well, 4% of them said they were thriving. Now, 14% said, well, I don't have any debt. But you see here that small number, 14% indicated that they were thriving. And so, but in my opinion, it's just my opinion, a college degree does make a difference, or if you have a skill set that will offer you in the long run a significant amount of earnings, more earnings than a non-college graduate.
Okay, and since we're talking about the workforce, we're going to switch gears and talk about the baby boomers who are still in the workforce.
All right.
Now, there was a Gallup poll in 2014,
right,
and it said there's almost an equal number of baby boomers, Generation X, and millennials in the workforce. Now, there are only a few people in the workforce who were born before 1946, but what does that say about retirement today?
Well, it has changed over the last 50 years. My father worked at a steel company or steel mill and retired, got a pension and a watch, and that was it. Now, I must say that there are many companies that have terminated their defined pension programs. You pretty well must rely on your own resources as well. Now, there are 78 million baby boomers. If you're born between 1946 and 64, you're in that category. 10,000 a day turn 65 for the next 21 years. So naturally, the boomers are working longer. They're staying in the labor force, and they have to plan very well for the retirement dreams. Now, some boomers are working because they have to. All righty? And then we have boomers who are working for pay simply because they want to work and keep busy. Now, a number of boomers had to forego their plan to retire. You know why? I'll tell you why. During the Great Recession,
yes.
Well, let's take it back to 2001, about 2001, where there was a 20 to 40% drop in the market, and retirement nest eggs sank. The value just was lost. And today, many of these boomers have not recovered from their losses with the ups and downs and volatility of the market. So therefore, that is a dream deferred. They postpone their retirement dream.
Which helps to explain the workforce
Exactly.
that we see today. Now, I know Gallup has done their research. I've done a little research on my own. And here's some of the things that retirees, people considering retirees, worry about. First thing is, when should I retire?
Okay. Well, in the survey that you looked at, that correlated with your research, Americans aged 45 and older describe retirement as a new chapter in life. And what they were seeing was that it was an opportunity to explore new options and to pursue their dreams. But many pre-retirees, again, they don't envision a traditional retirement at all. And so they have to battle with, when should I retire? Okay. Retirement is a moving target. The economy changes, you have to adapt and adjust. That is, you have to compare claiming ages for your Social Security, which could affect your lifetime benefits. And we're going to talk about that hopefully in the next segment to talk about the advantages of working until your full retirement age, and I mentioned the years, full retirement for boomers is 66 to 67. And a second career could be rewarding on both the financial and personal level. So you might be better off setting your nest egg goals so that working is an option rather than a necessity.
Okay. Now, also, there's a question as to whether you should move. Should you move to a state that's more cost-effective for retirees?
Well, you know, we talked about that, the movement of many pre-retirees taking advantage of opportunities in other states that have a lower cost of living. But 7 out of 10 current workers plan to work for pay in retirement. As I mentioned before, the experiences suggests that this may be more difficult than expected. They work for pay. Now, where they live is there's downsizing. Okay, that is, they have moved to age 55 plus communities. They have what they call age in place. That is, they took advantage of their homes being paid off. But I've always said, Carolyn, that it is a big mistake, that is to place your home in the calculations for retirement. We've seen the bubble burst,
yes,
and where people owe more for their home than their home is actually worth. So what we're going to do, we're going to take a short break, and we'll be right back after these special announcements. I want you to stay with us, and we'll be right back. Okay.
Meet Kathy, who's lived most everywhere, from Zanzibar to Berkeley Square.
But Patty's only seen the sights a girl can see from Brooklyn Heights. What a crazy pair.
Oh my, Patty. Did you find all your files? Finally. Who knew it would be this much work when Richard and I decided to retire? Well, what are you going to do first? Oh, we're heading down to Brooklyn Heights and starting on that Social Security paperwork. Why would you do that? What do you mean? Well, it's so much easier just to log on to socialsecurity.gov and file online. Well, what if I need to know how much money I'll be getting? Online. All right. What if our address changes? Online. What if I want Medicare too? Online. So how did you get so darn smart anyway? Online.
Well, welcome back. You're watching Skills to Pay the Bills in today's segment of JustAskFreeman.com. Carolyn, right before the break, we were discussing the opportunities that many baby boomers wish to explore and the options to pursue their dreams. And we also discussed briefly how some of their retirement goals, I should say, or when they could retire, the time has been postponed due to economic conditions. And so I want to elaborate a little bit further on that and discuss what activities to pursue that many boomers want to pursue once they retire. Now, since we serve many retirees and those who are preparing for retirees, a lot of them want to travel. That has been the hot button, the travel issue. To volunteer for an organization with goals that they share or work on, maybe their golf game or tennis. I've even had, I call them platinum, 75, 80-year-olds say, hey, I love to ski, all right, very physical. Pursue new hobbies, but they have to keep in mind that some retirement activities are very, very expensive and more costly than others, so they must include the estimated cost of having a retirement fund before they use it. So I wanted to indicate that, or to augment the discussion we were having about when to retire, what will I do?
I agree, because work takes up a big block of people's time, and it gives structure to time. So when you brought in about activities, it shows that there is life after retirement.
Exactly.
There are things to do after you have completed your work
You're
cycle.
exactly right. All right.
Excellent. Now we're going to talk about a subject that's difficult for a lot of people, but it's a part of the life cycle, and that's the end of life.
Exactly.
You know, there are seasons, and the end of life is a cycle, or part of that season.
That's right.
So we're going to talk about how to try to make it easier for the loved ones left behind. And one thing that does that is the letter of instructions. And so, Freeman, I want you to help us to guide us through the letter of instructions, first talking about the list of documents.
Exactly. You know, the financial life that you have is more complicated than one realizes. You could have multiple bank accounts, brokerage accounts, retirement accounts, insurance policies, safe deposit boxes, and more. And there's still bills to pay, you know, and perhaps a mortgage and outstanding loans. But I do want to talk about this letter of instruction because you can pin this very easily. You can update it when you wish. It's a good thing to do it annually. It helps guide the individuals that you have appointed as the ones that will be administering your estate. Yes. So let's look at maybe with the list of documents and their locations, which is important.
Yes.
The wills, your financial accounts, at least the latest statements, and insurance policies, tax returns, that's important, your deeds, your mortgage accounts, vehicle titles, Social Security cards, your Medicare cards, just to name a few, marriage licenses and divorce decrees. All that's important, and of course, birth certificates. Yes. That's very, very key. Another item that should be listed on that document is contact information.
Yes.
For individuals who will be communicating with your executor or executress or whoever is administering your estate, insurance agents. You have your CPAs. You will also look at other professionals such as accountants, as I said, financial advisors, your attorneys. They are important people that are in your life, and that information should be documented. And again, you must place this document in a safe place so the one who is administering your estate will have that information available to you.
So then what about the bills and creditors?
Well, at least have an updated statement or latest statement, the amount of the payments that that will be made to these creditors and when they are due. That is key.
And then, you know, we're in a technological world today.
Exactly.
So what about the passwords and the logins?
Well, boy, did we experience that dealing with this technology. There's some places on the web where you have to change your password sometimes, several times a year or whatever, and you get locked out of certain passwords or use of passwords that you've used over a 12-month period. You should have those documented and date the time when you change the passwords. Again, I'm going to emphasize having the document available for your person that is administering your estate. And
then your final wishes.
Well, that's for burial or cremation, which is very, very important, a funeral, a memorial service, even organ donation and charitable contributions in your memory. You have that information listed, all right? Now, again, we do have attorneys, state attorneys, that where you can get an advance directive, pour over will, et cetera, on how you wish to have your estate administered. But this is a non-legal document that can be placed where the person that or people that will be handling your estate can have an easy time to navigate through that difficult time when there is a loss. So you keep your letter of instruction in a safe and accessible place. You tell your loved ones where it can be found, and it'd be wise to give the letter to the executor of your estate. Like I said, it helps your family navigate through a very difficult time.
Yes, and that is so key. Mm-hmm. Well, the next topic we're going to cover is how to make $1 million retirement last.
Exactly.
which is not that easy because we talk a lot about the longevity risk.
Yes.
What happens if we outlive our money? That's one concern. Then there are other risks that we have to consider. Inflation is a concern.
Exactly. Of course it is. Look at the last 5 years, Carol. Inflation has been around 2.25%. But if we examine the statistic of 2.85% over the last 30 years, that has been a significant impact on the purchasing power of your retirement dollars. So long-term inflation trends have been higher. And as I mentioned, you can compare the figures, 2.25 compared to 2.85, and we see cost of goods and services rising and our purchasing power diminishing, yes.
And then there are unexpected events.
You know what I call them? Derailers.
Okay.
Unexpected events. I mentioned early on our show that the Great Recession, it took a toll on retirement dollars. It knocked people right off track when it came to the retirement monies, and even trying to save. Now, that's the average now is $117,000. Now that sounds daunting, but the setbacks for long-term goals, that can be mitigated by simply maintaining the emergency savings fund. And when we do when we interview an individual and we're doing their retirement income planning for them, we put a lot of emphasis on having an emergency fund.
Yes.
Okay. We had a few emergencies here where we did not have to dip into our retirement dollars, but having that emergency fund available, liquid, and to take care of anything that might pop up. What is interesting too, what might pop up? I mentioned the fact on our show, justaskfreeman.com, that the same economic conditions that you experience while you're working, you'll experience too when you retire. And so a lot of times you're on a fixed income. So therefore, you have to prepare with a good, solid savings plan that is liquid. And I also mentioned too, you don't use your retirement dollars, your nest egg, as an ATM machine.
Yes.
Don't dip in there and then you fall short. That's the unexpected events that comes up from time to time, whereas people get into the retirement income plan, retirement income, or nest egg, and use it for emergencies. No.
And then there's what I'll say is the insecurity of Social Security,
Well,
because we don't know exactly how much you'll get. So you want to talk about that?
Yeah,
too?
let me talk about that a little bit. Social Security, the annual report of the Board of Trustees said that the Social Security Trust Fund is going to be funded until 2033. Then we just don't know. It may be exhausted. But payroll taxes will only cover 77% of the benefit. Well, depending on your age, you might need to scale back the expectations of Social Security. Now, you've heard me say you cannot depend on Social Security. You cannot depend even on defined pension programs because they are almost diminished. Back in 1989, 86% of all American companies offered a defined pension program. And I had mentioned now they're hovering around 24-25% of all companies offer a pension. Well, we can't depend on Social Security. We can't depend on a defined pension like my parents and your parents had already. So we have to depend on our own resources. And to get some help on that, go to our website, justaskfreeman.com. You can download a free Safe Money Kit. And that kit will consist of information that is relevant to retirement income planning, utilizing your resources so that you have the dignity that you so much deserve, and get professional help because it's kind of hard to navigate retirement all by yourself. It's difficult.
And then the last risk we're going to talk about is sequencing, which is a complex, at least to me it is.
It is. You know, that's where you have the timing of unfavorable portfolio growth, especially in your early years, Carolyn. This could result from adverse financial conditions, one. And two, inappropriate withdrawals from your retirement nest egg. Some people take too much out and then they run out after 5, 10, or 15 years. And surprise, okay? Or they don't take enough. Or they try to navigate again all by themselves without professional help, and their nest egg dry up, or they never utilized the monies available to them to have the type of retirement safety of their money and lifestyle they wish to pursue. But again, it's achievable and is within their grasp. And this is where we help many individuals who are preparing for retirement and those who are already in the retirement mode, just like yourself.
Yes.
Well, we planned several years ago on how you were going to retire and minimize that sequencing when it comes to the withdrawal or the drawdown process and or where to place that unfavorable part of your portfolio. When do we take the distributions, etc.?
Yes.
All right.
And now let's move on to a brief discussion about Social Security, about people who claim Social Security early, and whether or not their payment over more months versus more money per month has a positive or negative impact.
Well, Carolyn, you know, I'd love to elaborate on that, but we're going to have to wrap it up because what is happening is the clock on the wall says that our time is just about up. And before we end this segment, I want to remind you to request a copy of our Safe Money Kit, which is absolutely free. You can simply log on to www.justaskfreeman.com and request a Safe Money Kit. It contains valuable information that will help you to clearly understand how to keep your retirement dollars safe from unnecessary losses. And remember, we're here for you. And also don't forget to tune in to Skills to Pay the Bills each week right here on Channel 10. And we'll see you next week for another segment of JustAskFreeman.com. Thank you for being here, Carolyn.
It was a pleasure.
And I want to thank all our loyal viewers that tuned in.